Okay. A quick 5-10 minute video. If you got your email, if you check your email, I sent out a file called Dividend History, some date, December, whatever. But on that, excuse me, on that sheet at the bottom, you'll see a bunch of worksheets. One of them is put at the front called calculations. So basically, on this sheet, if I did it right, you can go in, put in the price that you bought a stock at, and what I was working on was the dividend rate. So if you want to calculate the dividend rate, you can break it down to, if let's just say the dividend rate was only 5%. I'm gonna have to go back and see what I put this in here for. Anyway, so if you came in and said, I don't know whatever the price is, but if you said your quarterly dividend amount was, let's just say you got 6 cents a month, it will go in and calculate the rest of these for you. So and or if you said you was getting 10% a year, it would calculate the year, annual year. I'm gonna come back to that. So anyway, so I did at the bottom, and you have to really check these because I just copied and pasted the date over. I started ET. What I did was I went in, which is energy stock. You can go in and you can go to a couple of sites and you can pull up the actual date to get the download the information. And you can fill in the chart. So I copied basically these headers and I copy these over to each one of these. So you have to make sure that the data that I put in is the correct data. So like, if you look at RBA, you have to make sure that these dates are correct and that these are actually the right data, because if you went to UMH, you can see I hadn't put it in yet. IVR, CIM. So you have to go back and check these dates and make sure what you're going to fill out is the closing price and I think that's all you got to put in, and the date. You got to put the date in. Well, it gives you the pay date. Let me look at one that's blank. So it gives you the pay date. You have to fill in this. You have to put in the closing price on the pay date. So the pay date, this date right here, would have to match the date that you download the data. And I'll show you that. But you see how this is sorted from the last date to going down, sending. You want to sort that and do it from the oldest date up. So you would go in here, if you're not familiar with Excel, and and you would highlight UMH. Okay. Okay. There's, well, quick class on Excel. First of all, you don't want this part to go off the screen. I should have this one right. So when you scroll down, you notice how this right here stays on the screen. So we'll work on the spreadsheet. But what we're going to do is we're going to show you how to go in. I did ET for you, but I'm going to start this. We're going to go in and we're going to get the data and we're going to put in there and show you how it'll fill out the sheet just like this. So it'll show you how, in this case, it was like, she's designed for you to say, if you bought X amount of shares at one time, if you bought 100 shares, if I change that to 500 shares, that means a one-time investment on whatever date that you put in. It would go down here and it would calculate for you. So you said, well, I didn't buy even, I bought 237 shares. It'll go down there and it'll calculate that for you. If you change the date to say, instead of 11/5/2007, but if I said I did 2008, those zeros should come all the way down to another year. See, now it started at 2008. So hopefully this sheet is correct. And over here we have, if you look up here, we have formulas. So the sheet is not complete, but here we actually typed in the data. So when you go to VOC, there's no formulas in there yet. So I'll have to copy the formulas over to make sure when I put in this, it'll calculate right. RBA formula's already there. So probably should move VOC the other way because that didn't copy yet. That one's copied. That one's not. That one's not. That one's not. So anyway, that was just a brief thing of the sheet. So when you get the sheet, if you got stocks, you can actually go in and change the name and put your data in. And I'll go back. We did this in another video. Unfortunately, the audio was not on, but you should have gotten an email to tell you about going to the Yahoo site and the NASDAQ site to pull that data. But today we're just going to want to show you a quick example of how you can combine dividends and take that spreadsheet. The main reason I did the spreadsheet is so you can calculate how much you need to get on the covered call per month and what percentage rate you would be getting. So this little calculation right here is for basically saying, okay, if I'm getting so much on a dividend, which may pay monthly or it may pay quarterly, how do I equate that to the same amount or more on a covered call? Because if you get 30%, 30 cents a quarter, that's $10 a month. But if you did the options or the covered call, it may be on a weekly basis. So you have to calculate the 2 or the 3 cents to equal out to the same thing as the quarterly rate. That's what this is all about right here. We'll go into that later on. Right now, we're going to go back to VOC. This is basically it's pretty good stock to look at for it's kind of a U. It has kind of in the last end actually went above that line. But what I want to show you is even at the high rate of close to $10 now, this stock is still paying 13% dividend, right? So you have to go back and see if they ever cut dividends, but they always pay 9 to 10% dividend. So what I was going to show you was if you started way back, this is a 5-year chart. If you started way back here, and I don't know, this is 2013, that's close to a 10-year chart, you would say, wow, you lost a lot of money. So what you want to do is if you went back all the way back to 2013 or 2011 or anytime up in here, what you want to do is say, okay, if I would have just bought this stock in whole, wow, I really lost over half of my money. So you'll see how dividends will say, yeah, but I don't have to get back to 225 to get all my money back, because now 10 years later, I have 3 times as many shares, definitely more than 2 times as many, because paying that high rate, your number of shares would double. And as the stock goes down, you would have got more shares. That's what I want to show you. So anyway, this stock pays from, I don't know about way back here, but it pays good dividends. It's always paid good dividends. Even though, you know, in 10 years, the stock really did bad, but if you started here, you did pretty good. So from here on, you from about $5 on, you have done great. It hadn't dropped a whole lot in 2015. In 7 years, you would have done pretty darn good with the stock. Unless you dumped it there, but if you held on, you done good. So anyway, what I want to show you that it pays 13% annual dividend. It pays 36 cents or 0.365 cents per quarter, right? So you got to remember the quarterly date amount versus the yearly amount, and have to watch how different platforms display the amount. But this is paid every quarter, which is 4 quarters in a year and 3 months in a quarter. 4 quarters in a year, 3 months in a quarter. So you want to look at the date. Okay, this was 10/28. So in any stock, if you look at let's see, probably can't do it in a month. Let's try your chart. Yeah, if you look at any chart when it comes to dividend, when you see stuff like this, you want to be careful of when you buy, because here, even though the stock finally went back up, if this stock is up here, you're really like, it's a big chance that this stock may drop all the way back down to here. So you would better off to try to buy the stock at the bottom peaks than at the top. Of course, you know, stocks do make new highs. So if you wouldn't have bought here, you could have got in here. But if you missed out, then you would not have to buy here. So it's a chance. Me personally, I don't really chase a stock. So if I had the stock here, once I buy the stock, I may hold it. But if I didn't own the stock, I would say, okay, yeah, but it's at the high. I'm gonna wait and see if it comes back down to closer to $8 or $9 on this one stock particularly. And it may keep going up and you never get in, but there are, you know, 50 other stocks just like this. So what the spreadsheet was showing you was how to break down this. The same thing with dividends. It's the same covered calls, which is an option, same thing. But basically what this was going to show you is how to convert. And I gotta maybe go back and rethink what I was doing at the time, but how to convert yearly, annually, monthly. So you can see that, you know, don't get the 2 or 3 of those confused. So it's calculate how much you get per dollar wise versus percentage wise. And so that's what I was working on with this, to show that you gotta really grasp 2 or 3 cents could be a lot more when you're looking at weekly versus quarterly versus monthly. So anyway, so what I wanted to show you was, I wish I would have had fidelity up here, but anyway, we was gonna do it either way. I wish I'd have fidelity up. So this stock pays 36 cents. So you got to get the 36 cents out of your mind, in the sense that that's per quarter. And so this would say, okay, 36 cents per quarter is like 11 cents, 12 cents. 36 cents per quarter would be, divide that by 3, that would be 12 cents. So 36 cents per quarter would be 12 cents a month. All right. So you guys say, okay, I'm getting 12 cents a month. So you got to figure out, if I'm gonna play the option game, can I get around 12 cents a month on the dividend or on the covered call? So of course, if the stock is going up, you got a much better chance of getting that 12 cents. You do have a problem with any covered call when the price is so close to something. This one is in great shape because it's close to the $10. Even though it's 30-some cents away, it's still close to the $10. So when you go look at the options, you have to say, what do the options are? So this is in a dollar increment, and it's done every month. So January the 20th is a couple weeks away. Oh man, it don't show. So you won't get the really. Let me do this real quick. See if I can. Let's see if I can do this real quick. Sorry, but E-Trade zeroes out, bro. Options. Like 6 o'clock. So after 6 o'clock, you really can't play with options on E-Trade. Dang. Okay. So what I was going to show you was, is there anywhere I got an option chart? Let's see if I can go into my other account and see if I can pull it up. See if I can get it to come up on Yahoo, or I really probably should have used Fidelity. Yeah, they give you a better option. Come on, slow computer. While I'm waiting. So the good thing about the chart, you can go and see how much dividend they paid each month. And you can tell if they cut the dividend real hard. So here you see where they only paid 3 cents, which was in 2020 when it crashed. Then they went to 9, 3 cents. So you have to know exactly what percentage that was, so you didn't get as many shares. We're going to see if I can bring up an option chart real quick, so I can give you a quick analysis of, can you get that 12 cents a month? So hopefully I can extract this pull this out. Let's see if I can pull it out. Okay, there we go. So if you look at the options for VOC, Fidelity will give you, well, they don't really give you too much. I thought they might have would have gave you March. But so if you look at the 10, so we was trying to get 12 cents. So if you're looking at the 10, 12 cent per month or 36 or more cent per quarter, that'll give you another 15%. So here, there's a gap of 5 to 25 cents on the $10 call. So there's a 90 good chance that you could probably get in the middle. This is probably done in only 5 cent increments, so you can't do 12 cents. You got to do 5 cent, 10 cent, 15 cent. So you would try to see if you can get 15 cent. This is not quite. This tells you. Tell me how many days. I thought it tells you how many days. They can tell you how many days, but bottom line is, the 20th is a couple weeks away, whereas February, $10 is a big gap. This is low traded stock, so but you would want to get at least 30 cents here because that's 2 months. So you're looking at 13 and 13, so that's 26. So you would try to get 30 cents here. That 30 cent would add to the, oh, that's the $11. So you would be up here. So you would play around and see if you can get 30 cents here. And so that means if this stock goes up to $10, you got an extra 34 cents here plus 30 cents here, which means your actual dividend rate is more than 13%. It's more like 13 plus 15. So you're actually getting more like almost 30%. Dang, so we're gonna go over how to combine the two. We get and also go in and look at the actual data. We don't have, like I said, I didn't do VOC for a reason. I may do part of it to show you how to go in and find this number to match up the pay date with the actual price, and then it should have gave you the amount that it paid. See where because it dropped down to 3 cents, and the formula would do the rest for you. So like if you look at the ones that I did do, I think the reason main reason I slowed up on this was because I don't think this one split, but I know ET did. What's ET? Anyway, I'm almost sure that when I did the chart, I found out that stock split, and when looking at the data, I gotta figure out how exactly to calculate if the numbers are accurate versus split or split adjusted. So when you go back here, and if you had split. Yeah, right there. See that little black thing right there? On this, it's a little different on different company, but there it tells you that this stock split back in 2014. So if the stock split 2-to-1, then you have to readjust your number of shares on the sheet. So if the stock split, even if you started out with 100 shares or whatever, if you would have started out with 100 shares, a 2-to-1 split would have meant now you got 200 shares. So this number should change to 200. And I do not know how to, or have not worked on calculating that into the formula yet if a stock split. So this is actual real data if you would have bought X amount of shares and just held. And unless you got your account statement, you would know if it matched up. So that's just a quick thing. We're gonna go back over this full time. I just want to actually I want to test the video and see how well the if the sound come out. And if I decide to actually do a video today or do the video, we'll let you know. Thanks. And